Hi, everyone. Welcome to the Great Transition. Let me tell you a little bit about what we're doing today and the story that I want to tell you and the conversation we're going to have with our guest. The post-carbon world is already here. The post-fossil carbon world is already here, but not everyone can see it yet. And that's what I want to talk to you about today. What we want to cover today is to think about that great transition and tell some of those frontier stories, that job, and really moving it. I'm going to try and mute. If you come on, I can mute the participants. Yeah. The great transition is the biggest thing that any of us are going to experience in any of our lives. And I would argue it's going to be potentially even bigger, or certainly a bit like the digital revolution of the 90s and the noughties and the 20s, perhaps even more far reaching. And certainly, I think at least as big as the industrial revolution. And that's partly why we founded Eden Lab, which is a company that's built to think really hard about the sustainability, not just from the supply side, but also from the demand side. Like, how do you link how people choose and the choices they make and the things they buy and use back to this kind of big change? The most fundamental building blocks of our lives, though, are kind of how we eat, how we move, how we stay warm, how we stay cool, the clothes we wear. It's all caught up in this enormous shift that's going on in a world that's entirely reliant on fossil fuels to one that really isn't. And that's what I think makes this transition a great transition. So that's why I'm excited today to introduce two people to you. Vish, you're our guest today. Vish Srivastava, I should say, is, you can introduce yourself perhaps better than I can, but I know that you work for the Future Business Partnership. Tell us a bit about yourself, and then Mark will come on to you as well, Mark Bjornsgaard as well. Vish.
Yeah, very good to meet you all. Thank you very much for having me, Leo and Mark. So yeah, my name is Vish Srivastava. I'm a co-managing partner at the Future Business Partnership. We're a new private equity firm that specifically set up to drive the sustainable transition in household consumption, with the thesis that household consumption deserves a lot of attention in terms of impact investing, in terms of environmental change, while a lot of capital is flowing into good stuff like wind farms and education and healthcare. Actually, household consumption is the largest section of the economy, 51% of GDP. It's also the most pollutive sector of the economy. So household consumption accounts for over 65% of greenhouse gas emissions globally, and we are setting up a fund to invest in the businesses that are offering solutions to that. So established businesses, they might be quite old world businesses, traditional consumer products, retailers, or packaging businesses or ingredients businesses. Yeah, sadly, we don't get to enjoy the kind of young, sexy VC part of things with innovation of new things that are going to rapidly change the world. But we're really just trying to champion the next generation of body shops and Patagonias that really do things differently and campaign for better environmental and social footprints of the products that we use every day.
Very good.
And that is what we're here to do.
Well, we're going to get into that properly in the next sort of 45 minutes or so. And talking of young and sexy and the VC world, then who better than Mark Bjornsgaard, who is
either of those two things.
The previous guest and my special co-host today. Mark, tell us a bit about yourself for those who haven't come across you before.
I'm very happy to be here. Thank you for asking me to co-host this. I'm looking forward to learning a lot more myself. Certainly, yes, the days of youth have passed by. But I am the chief exec of Deep Green, and we are well, perhaps in sort of the other end of the spectrum in this weird business that no one has a clue what it is, which is data centers, and the fact that they happen to consume an unfathomably large amount of the world's electricity supply. And we are instead of all of the heat that data centers generate just being wasted, we are grabbing that heat and putting it to social good. So we're giving the heat away for free. So we're running, building data centers, and then the heat that comes out of the computers is giving away for free. So yeah.
Love it. And so today, the whole point really is to talk to Vish and with Mark, and we get to your questions as well, the guys that have managed to make it over to our live link this time. Really about the nature of the transition that we're living through, and whether we see it, what does it mean? How do you work with it? How can you make it faster? How can you get yourself ready for it? How can you be a part of the solution rather than part of the problem? Fundamentally, that's really what we're looking to do. And this show is part of a series, and we're speaking to really interesting people who are just doing it for real, really. So I think at that point, maybe we should get on with it. And Vish, talk a little bit about. Tell us a bit about your story and how you got to where you are today. And I'm really interested in kind of, as much as you can, tell the personal story of your own journey to how you got here.
Absolutely. It's very, very kind of you to ask. So look, I think I guess most people who are here listening, we all started our careers in rather traditional routes that probably had nothing to do with climate change and nothing to do with positive social and environmental progress in the beginning. We all just went into money making careers, and the money making career that I went into, and it's the same with my co-founder Tracy. We both went into city jobs, and through a few iterations ended up in private equity, and we had good successful careers in private equity. And private equity has quite a lot of influence over the businesses in which it invests. That's the important thing to sort of put forward.
Yeah.
You're not just buying shares in something, you're changing it. You can have a controlling stake. Even if you're in minority, you could sit on the board of that business. You can have a lot of influence over how things are done. So you don't just buy businesses, you change them. And the theory is you change them for the better and you create value. And the practice is sometimes that's what you do, and sometimes actually people load them full of debt and they do some clever financial engineering and they change them in other ways. They change capital structure, and that's how they make money or lose it. But the point is you have a lot of influence over how businesses run. In our case, what we were doing was working with consumer businesses, consumer brands specifically in my case, and that was quite exciting. It's quite a glamorous industry. I worked with Liberty of London, Mamas and Papas, the nursery goods brand. Learned some hard lessons in an investment that was very difficult, which was the kind of rescue and turnaround of Jack Wills, which didn't go to plan. But being in that consumer space was quite compelling. It was quite exciting. But eventually it got to the stage where you kind of have to sit back and think about it and say, well, actually, are we just growing businesses that are selling people more stuff they don't need? And I had a kid around the time I left Blue Gem. He's 5 years old now. A constant reminder of how long it takes to create a private equity firm. But yeah, he was born the year that I left my previous job. And you sort of think about, when he grows up, you don't want him to be as angry as Greta Thunberg. You don't want him to have to sacrifice his childhood to just being angry about climate change like she has. And you also want him to look up to you and think, what I'm doing is the right side of the line, at least. Not contributing to the problem, but actually contributing to the solution. And then it's only a short leap of logic from there to say, okay, what is it that we can do to be part of the solution?
Can I interrupt you and say, did you ever go through a moment of thinking none of my skills are going to be relevant for the new world, or were you always clear that what I know about money could in this space?
No, I think you're right. It's a great question, because obviously the first instinct is what's the sacrifice going to be? It's the first instinct. Okay, if I'm walking away from my career, if I want to be part of positive change, what's my sacrifice going to be? Am I willing to not be in a money making job anymore? Do I do a hard reset? I give up everything. I go marching with Extinction Rebellion. At least I'll be part of the cause. But actually, then you start to think about it. I mean, I genuinely believe that all skills that we have in sort of traditional industries can be used for good. They can be used for the right side of the line. They can be used to drive better change if targeted in the right way, and if used in the right conduct as well. And for me, it was the sector which is labeled impact investing was at a very nascent time. There were some fantastic pioneers out there already doing it, not making great returns, to be honest, but they never promised to. It was concessionary capital. We will sacrifice a bit of our returns in order to do some good in the world, and that was the money they raised, and so that was okay. That was what they promised, and that's what they delivered. But actually, I was looking at this and thinking, well, what could I do in that sector? How could consumer be relevant for that sector? That consumer is what I understand. How could I be in that sector, and how could I, create something that would really change the pace? And yeah, I mean, it was a very, as I say, it's a very short leap of logic to kind of, once you're reading the autobiography of Yvon Chouinard, the founder of Patagonia, Let My People Go Surfing. It's a great book, but it sort of turns from a biography, which is very entertaining, into a rather dry instruction manual on how to build an ethical business. And he has a chapter on capital, where he just goes off on one about how private capital, private equity, hedge funds, it's just not compatible with building an ethical business. It's not compatible with the fight against climate change. The horizons are too short, the incentives are too ruthless, let's say, and that just kind of got me thinking, because actually, as I said, private equity can change businesses. That means it can create a great deal of impact, positive or negative, in the world. I mean, you look at the UK high street, and the restaurants that have kind of take up most of the high street have all been through private equity rollouts. We know that when you allocate capital to something, it can really expand. Right. So if you allocate capital to something good, it can really expand, and you can do some good in the world. Why couldn't we have a role to play in this world? Why couldn't we be part of the solution, actually? And it was very obvious that the only way we can be part of the solution is if you don't have to sacrifice money making, because that's how you scale a business. Ultimately, the biggest pools of capital behind private equity are pensions, just normal people's pensions. It's not like a whole bunch of opaque, mysterious rich people funding these global changes. It's just normal people's pensions being invested into private assets as well as public assets, as well as bonds, everything. The value chain of private equity is real people's money, and they need that profit. That is pensioners' profits, of which they will live. So you can't sacrifice the profit incentive. But actually, if you use the profit incentive, if you could find a form of capitalism where actually the more good you do, the more money you make, then the profit incentive is a huge driver of behavior. You could really create a massive impact like that. And why shouldn't it be the case? The more good you do, the more money you make. Well, we're facing some serious challenges in the world. If you're providing solutions to that, why shouldn't it be lucrative to be the one who provides that solution? Of course, it should be. People have always been paid for solving problems. So yeah, we thought was, why don't we take the skill set that we've accumulated here, which is growing consumer businesses, and use it for those businesses, the next generation of Patagonias, those that are actually offering solutions to this problem. Champions for some social change, campaigning brands offering environmentally friendly products, real authenticity in the kind of efforts to kind of reduce and improve the environmental footprint of their supply chains, their packaging, their carbon footprint, all the way through treating people better, treating their suppliers better, treating their communities better, all their stakeholders. If we can, all of that can be measured, all of that can be quantified. You can test it, you can make sure that it's authentic. If you could do that and find the next generation of champions, then and become the investor of choice for this sector, you'd be doing some good, and you'd be scaling them up. You'd be having an impact, and frankly, you'd also be generating for yourself, your company, a fantastic, enviable market position in a growth industry, right? So it would be rewarding in every respect.
I don't know, Mark, if you've got a question. If not, I'm going to jump in.
No, go please.
Well, just there must have been. In the professional world in which you inhabit, in which you came from, and you're still in, you're not the only person to have thought, Christ, things aren't going brilliantly. And so I wonder what marks out the difference. Is there a thing that marks out why you and your co-founder, Tracy, did you say? I think her name was.
Yes, Tracy.
Went for it when others don't. Is there something, is it genetic? Is it luck? Is it chance? What is it that made you guys think, we're going to do it? And take, because it is a radically different approach in a sense.
Yeah, I won't lie and say that it was a total dissatisfaction with what we were doing before, and that we had to go purist. I mean, we did it because, I guess, the same instinct that drives many entrepreneurs to start their own businesses, and you spot an opportunity, you can't think about anything else. And if there's an opportunity to do some good and actually, just like normal, an opportunity to make some money, then of course you can't think about anything else, and you mentally check out of what you were doing before anyway, because you're obsessed with that and nothing else. I think those that work in the investment, there are good people in private equity, right? I will not slag off an entire industry worth of people. I do think if you put good people into bad incentive structures, you get bad behavior. But there are good people in that industry, and the industry is changing. Absolutely. Environmental and social governance is now kind of a word that is used in every conversation that happens in that industry. Some of it's more genuine than others, but actually the younger generation of people are working in this industry as well, and they really believe in it. Funds are getting raised, allocated to better investing that really scales up change, and that is helping. I think it's for those that might have an entrepreneurial itch, I'd say you should jump out and do something that really is game changing, because actually I really think there's a commercial opportunity in that as well. But for those who don't, fair game. You stay in traditional roles in traditional firms, and you can edge things forward absolutely in a very important way. through just integrating more and more environmental factors into every part of the private equity value chain, in terms of screening, in terms of incentives for people, in terms of how you allocate your capital, what you do with the businesses, how you have an influence over them. Of course, that will have a change as well. It will have an impact as well. So yeah, things are getting better, and yeah, it's not all about packing it all in and starting again. It isn't entirely necessary. Yeah.
Isn't it all about structures? I do think, presumably your thinking is that the structures will change. And, even when you look back at the way Thatcher structured regulation about the water industry, it's not private equity's or anybody's fault, that it was the fault of the structure. Do you know what I mean? Like it was, and sure, that I guess that must be part of your logic, that quite rightly, and it's part of our logic. If you follow the puck, you can see those structures changing, and therefore there will be market opportunity. Even if a lot of people don't necessarily believe that market opportunity exists now, then
yes,
as those structures change, right?
Absolutely, I couldn't agree more. I mean, I think the structures currently are that the whole industry is incentivized on one measure of success, which is IRR, internal rate of return. It means the distinction between IRR and money multiple, which is just a return on, how many times your money do you make on an investment, is time, right? So IRR just means make as much money as possible in as shortest time frame as possible, which already sounds quite destructive, doesn't it? And to the exclusion of all other factors. That is the overarching measure for testing whether private equity managers get paid a commission of the upside by those whose money they invest, the pension funds I mentioned earlier, and the other asset owners behind private equity firms. That's the structure. So, as I say, you take good people, you put them in structures where they're incentivized on the achievement of short-term profits at the exclusion of all other factors. And yes, sometimes they will behave badly. We've innovated something, and we very proudly call it a new way of ethical investing. It's not that complicated. All we've done is take our commission on the capital gain, our carried interest, and we've linked it to the achievement of an ESG upgrade in each portfolio company in which we invest, as well as capital gain, right? If there's no capital gain, there's no share of the upside. But even if there is a capital gain, and we've done it through trashing the sustainability of what we've invested in, we just don't get paid. So both of those things have to progress side by side. We've used a well-recognized external measure, the B Corp methodology, which is increasingly well-recognized even in the investment world as well as in the consumer world. And that's a nice, unbiased external measure. We didn't design it. We're not marking our own homework. Somebody else measures it. Somebody else verifies it. And the score has to go up over the course of our ownership in order for us to be eligible to collect our incentive. And that's us innovating. I'm not saying the whole industry will move to that, because, not everyone will become a B Corp. It's quite onerous, actually, for a lot of businesses. We're quite lucky that we're investing in ethical consumer brands, frankly, that could be B Corps anyway if they're really doing what they say. So it's a head start, but it's something that we did to differentiate ourselves and to prove a point, which is that actually, you can align profit and purpose. And if you argue that those two things are a virtuous circle and they're aligned, actually, why not connect them? Why not find a mechanism? And this was the simplest mechanism we could think of. What may happen instead, I think the whole industry is going to move to that. But I am a bit reassured that, it's what I said earlier, the ultimate stakeholders in this are pensioners, and actually, people, those stakeholders, pensioners, normal people, they are becoming better informed about the impact of their savings, where they're invested, how it's used by the financial institutions to whom they entrust their savings and their pensions. And they're expecting to see some reports and some information back from their pension provider about what their money is being used for, that it's not being used for significant harm, that it is being used for some good in the world. And so some KPI will start to flow, some information will start to flow, and that should drive behavior. And at the same time, if you underpin that with regulation, obviously, from governments understanding more and more the dangers of using money in the wrong way and the opportunities to use it in the right way, then hopefully those two forces will take things forward. But really, I go back to what I said about the profit motive. You'll have the demand from the stakeholders. Those managers who do this best should have access to more capital, lower cost of capital. There should be better opportunities commercially, financially, if you're satisfying the demand for better investing, and that ultimately, I think we always said that if we achieve our ambitions, and I hope we will, that it's not just to make a few investments here and there and sell a few more bottles of eco-friendly shampoo rather than nasty shampoo. The point we're trying to make it here is that we want to broadcast that you can make money by doing good. If we can do that, then frankly, even the most narrow capitalists in the world who don't care about anyone else should say, you know what, I want to make some of that money too. I'm going to behave well. You should be able to drive a lot of behavioral change, and that would be us having our impact outside more than just our four walls and across the entire industry. That's the ambition of the Future Business Partnership. So that would be the structural change if people start competing on the basis of environmental and social change, not just on the basis of returns.
And do you foresee this being, I mean, this is very subjective really, I think, but do you foresee this being like it's a 10-year journey or a 20-year journey till society wakes up to, what you're talking about? Or are you expecting some kind of sudden shift or transition that happens, that suddenly everyone changes their attitude towards where their pensions are going, for example? I mean, what do you expect to see?
I would love for there to be a sort of a sea change moment in informational flow in the hands of those stakeholders, right? So at the moment, pensions are pretty opaque or pretty confusing to your average pensioner. It would be amazing to have suddenly a sea change in the information that's put into their hands in terms of how their money is used. I think regulation is slowly changing for the better, which is quite reassuring. Obviously, kind of depends on who's in power, but you've got to keep your fingers crossed on that one. And I think the reassuring thing is that even when FBP was just an idea, I'd left Blue Gem 2018. The first sort of 10 minutes of every conversation, when I introduced myself to someone, had to be how we are investing for an environmental and social impact, but don't worry, we're not going to lose your money. There was still this argument about, or this belief, this default belief that you can't do both. You can't do good and make money. There must be a trade-off, right? And so what's your trade-off? They would say, how much money are you going to lose in order to do good, or how much good are you going to do? How are you going to limit the good you do in order to make money? And that conversation doesn't exist anymore. It's just gone. People don't need that. You don't need to argue that point. People understand that actually, that there is a huge movement of capital into impact investing. It's all in the hands of the same private equity firms who it's in before, but they've got these sub funds investing into impactful investments, and people trust them to make money, right? So if the biggest money-making brands in the world are behind environmental and social investing, that debate is gone, and so we get a head start, and so actually the new debate is how is our focus on impact going to make us more money than if we weren't focused on impact. That's something where we like to think we've got quite a good set of arguments, and increasingly, if you look at what we're doing, a set of evidence as well. So the movement is positive, it's in the right direction. It feels slow from day to day, but actually when you step back and look at it, say, yeah, actually even 6 years ago things were completely different. So things have changed a lot, and so if things continue at the same pace, we should see that within our lifetime. Absolutely, that has to be the ambition. The thing that's a little bit scary is something that thankfully doesn't seem to be rearing its head in Europe or the UK, but in the US there's the anti-ESG movement, which is puzzling.
Are you seeing effects of that over here in your daily world, or not?
I guess one step removed. I mean, we don't have the backing of any US-based investors, not because we've been rejected, but because we haven't tried. Just too far afield, and we're in a sort of an earlier stage of development with a lot of support from European investors and Australian investors as well, but mainly Scandinavian and Central European and UK. But we know people who have raised funds globally, and what we hear out there in the market is that it's been harder in the last 12 months to raise environmental and social impact funds from US.
Is that not? Can we not be somewhat reassured by? I mean, in the long run, that's ultimately a factor of the worry of Trump getting office again. I think from what I'm hearing, you get people who have got kind of alternative web pages that say nothing about sustainability, just on the basis that might be coming. But I think the long-term vision, the long-term sort of direction of travel, I think we can still be somewhat reassured by, even if we have another 4 years of crazy. I don't know.
Yeah, that would be the optimistic
Well,
view.
yes,
The pessimistic view is that he's just another symptom of the same underlying cause, which is causing this. And I think Leo talks about the great transition as a transition away from an economy dependent upon fossil fuels. And lives dependent every day on fossil fuels. And unfortunately, out there you've got an enormous, powerful economy which is dependent upon fossil fuels and everyone's daily lives as well. Yeah, there's no surprise that the first of the governments in the US to sort of start to legislate against the federal, the state's money being invested into fund of funds or fund management companies that had ESG as one of their goals was Texas, because it's built on oil money. It's worrying, but I think we haven't seen even an inkling of that in Europe. Not a shred. If anything, things are moving more positively.
I agree. It's accelerating over here.
Yeah.
So, Vish, I really want to get into, part of the reason for doing this is to try and extract some lessons for everybody and some practical things. They might even just be the way we think and act that can help us make the leap that you've made and increase the pace at which we're driving that change towards the new, better world, the other side that exists. I was wondering whether I might start with just asking you, have you experienced kind of tensions in making that jump from the old world to the new? Like, have you ever have to wrestle with, or are you so clearly set on where you're going that the past there's no anchors or pulls or friction anywhere? I mean, how do you find that?
I think the friction is starting something new. It's really hard. Starting a business is really, really hard. We have learned, we've not been entrepreneurs in the past. We've been finance geeks. Having to start our own finance geekery is the first entrepreneurial experience we've ever had, and it's really hard. And there's ups and downs and the fundraising market has been nasty in the last few couple of years since the end of COVID and the onset of the Ukraine war, etc. Consumer's been a dirty word as well in most investment conversations. Everyone wants to stay away from that kind of discretionary fashion risk. Right. So we've had adversity. We've stuck to our guns. It takes a lot of resilience would be a nice word. Stubbornness is probably the more accurate version of that. We knew we had the right strategy. We just need to keep on going. And things are easing up now, and we're on a point of positive momentum in every aspect of our business. And I think the one thing to say about all of that stubbornness, that resilience, that kind of the motive, I guess, to wake up and keep on going in those hard moments is what you have to really think about. And for us, the motive was this, right? We are doing this for more than just the money. It's not just a risk reward calculation. We really want to devote our lives to this. The upside of getting it right obviously is financial success, but it is so much more than that. Being able to be proud of what you do, being able to get up and go to work every day with people that you like, doing things you like doing, and things that you can really feel like you're making a positive difference, I think is incredibly motivating, and really that has helped us through those difficult moments. So I think motivation is absolutely key. Really understanding what it is that is driving you to do it. And if you don't have that let's say the stupidity that I have in taking this motivation and translating it into an entrepreneurial challenge, because it is a little bit reckless, let's say, then you just want to stay in your job and do things slightly better every day, then that same motivation can be channeled in a much safer way. The motivation is what drives everything. And I think that motivation is, what can I do with what I've got, with who I know, with the skills that I've accumulated? What can I do to be part of the positive change? And there will be an answer. Whatever your career is, there'll be an answer to that.
Yeah, that's great. That's really good. I'm really keen to pull those things through, so that when anyone comes across this content or anyone reads anything that we put out, that that's the realization that they also come to. I read a great quote. It was from someone actually in the Green Party, but don't hate it, which was it's not technological innovation that will save us, it's social innovation. And in a way, social innovation is predicated on the ability of people to change their hearts and change their minds and change their actions. And that's really an interesting way of thinking about what the transition is. It presents as money, and it presents as technology, and it presents as change consumption behaviors, for example. But really, it's actually about
a
change in sense of self, really.
Well, and can't we be reassured that ultimately, right deep down, we sort of know this is the right thing to do, and that the tailwinds are there? Do you know what I mean? Like, I think there's something very sort of deep, and certainly in I hear in what you're saying, is that you sort of do we kind of know we're on the right path, and I think sometimes that's just got to be good enough, hasn't it? I think.
Absolutely. Absolutely. I completely agree with that. You feel reassured you're on the right path if you feel proud of what you're doing, but also, it's good to be in an industry or in a path, let's say, that's got the wind at its back. Everything is easier. You got a little bit of a tailwind, everything is easier. It's like the difference between, I used to think I used to go and visit Hong Kong with mamas and papas when we were sourcing prams out there, and I used to see people doing what I did, private equity in Hong Kong at that time, maybe no longer, but at that time, thinking, God, everything seems easy out here. It's got, everyone's got the wind at their back. They're doing what I do, but they seem to be, their life seems to be much easier, and they seem to be happier. And actually, you can do what you do, but in a different stream, and move to one where you've got the wind at your back, and everything just gets better than if you're doing it in a stream where you've got the wind in your face. And I just think the point you're making, Mark, is exactly the right one. That hopefully doing things for good, solid environmental and social ambition should have the wind at its back, rather consistently from now on. Like it shouldn't go away. It shouldn't be a flash in the pan. It's going to be a long-term positive transition, fundamental underlying shift. You want to be on the right side of that shift. It will make everything easier.
I think that's true. I always think like it not being involved in it and ignoring it, or hoping it's going to go away is a bit like the Industrial Revolution happening, and you're sort of focusing on combing the wool without really looking over the hill. And it amazed me how many people are still in that space, though. Actually, really.
Well, it takes a lot of energy, both as a individually and as a business, to do the wrong thing. I think people, when they're doing the wrong thing, they often misprice the amount of energy and time and money it takes to actually physically do something that. I mean, maybe I'm making a moral point, but you know what I mean? I think, it's hard, and that ultimately that takes its toll. I think, karma is a bitch, but that's because karma's a bitch. Do you know what I mean? Yeah.
And is that anything? Go on.
I was about to say, I mean, we still do see some parts of our industry sort of like doubling down on on those investments. There's still some people who are buying up, or some firms that are buying up oil and gas services companies. But interestingly, I think, again, I take reassurance from the fact that the reason they're doing this is because, number one, they have a long-term view, which says that we're not going to transition as quickly as everyone thinks or wants. But actually, because everyone thinks it wants to transition quickly, we can buy the stuff cheap. That's what they say. That's their main thesis. Is we're investing in oil and gas services because we're buying it at 3 times earning. It's super cheap. But actually, you kind of take that a generation forward. And if you're an entrepreneur who wants to start a business, it's not going to be in oil and gas services, is it? If you're only going to be selling that business to some bottom fishing private equity firm for 3 times your earnings, when actually you could be. You look across and there could be some great innovative environmental technology which is selling for 10 times revenue. And so you would hope that in a generation that kind of unwinds itself. In the short term, there's going to be money making to be had from those who take a bet against this. But that is only in the short term, I think. Do
you think that, I'm sort of jumping slightly, but do you think, Vish, that you can anyone in any company change direction, or do you have to rebirth a new entity and start from scratch, do you think, to do it right? Like, so we often debate whether the big companies can do it, or whether it's just small companies that can start afresh. What do you think?
I think it's the old. It's no different to the usual argument for big versus small and Jason versus Goliath, and the kind of entrepreneurial spirit of being the Jason rather than the Goliath, right? It's I think 20 years ago everyone would have said, the big giants in retail will never adapt to online sales. Online is going to be the next big thing. So actually, the young startups will be everything. And actually, you fast forward to now, and there's a bit of a mix. Like some of those big companies are selling a lot online. Yeah. Some of them don't exist anymore, and some of them are replaced by the small ones who have become big. There's this constant creative destruction and churn. I think it'll be the same in sustainability. It's definitely easier to start a sustainable supply chain rather than retrofit sustainability over an existing supply chain at scale. That is for sure the case. Other things are made easier by scale, frankly. If you're looking at buying sustainable packaging and putting it on your product, frankly, if you've got the buying power of Unilever, might be quite a useful thing in order to get the price to something economically viable. So I think there will be a mix, but there's going to be it's definitely at the moment it's an axis of competition which favors the small, and also maybe sustainable consumers also quite like the idea of independent brands supporting local, supporting small. It's part of that same mentality of doing something different and doing something additive. So I think that there is definitely an opportunity for a lot of businesses to differentiate themselves through being new and young and small and startup-y, differentiate themselves on an axis of sustainability. But I definitely would not begrudge those who are retrofitting it over the big businesses, because if they succeed, they can do it at tremendous scale, and that really will drive an impact. A little bit of a change in and I think Unilever is always a great case study to look at this. They're vulnerable to a whole load of criticism from people who say they're greenwashing, and they're vulnerable to a whole load of criticism from shareholders in the US who say that they're sacrificing performance through their focus on ESG, and they're vulnerable to criticism from everywhere. But actually, if you look at the fundamentals of what they're trying to do, if in those areas where it is succeeding, they're doing it across a global business, at global volumes in every market, and at mass scale. That those little changes can drive a decent amount of impact if they reduce their carbon footprint globally by a couple of percent. Unfortunately for our startups, it's more impact than we could hope to make in 10 years, right? So you can't begrudge that, and it is reassuring that the large players are competing on those bases as well. Also, it should be seen as not just something to do which is necessary. I always bring this back to profit motive. It's not just that they're doing it because they're guilted into it or because they're regulated into it, but they compete like everyone, not only for selling their products but also for talent, and they compete for people to come and work for them rather than go and start their own businesses. They want to get the best of the best in terms of the talent that's out there. A generation of young employees who really care about the ethics of the workplace in which they have to wake up and go every day. So yeah, there's always good reasons why it's worth paying close attention and doing something different, doing something better every day in terms of ESG in order to drive success. And it can absolutely apply to the big companies as well. So yeah, they'll need the talent driving that as much as the innovation might come from startups.
Yeah, that's really interesting. Do you think, and one of the things I'm slightly concerned about, I suppose, is that, and the reason why I started Eden Lab actually is that vision that there's about roughly, and it depends on segment, depends on market, but you can largely say that about 15% of any given population will probably err towards a more sustainable choice when they're buying things or making decisions. 70% roughly are persuadable or could be convinced, and then there's some resistors that you never get to. I guess the challenge for me is how you get from serving the niche interests of those eco-active buyers who are up for it to hitting the other 70%, and that's the sort of chasm to be jumped. How do you think about that when you're, I guess maybe it's too far away a problem when you're investing in a scale-up start of a business, but I guess it becomes a problem later. How do you think about that or do you think about that challenge?
Yeah, we absolutely do. I think there are a few reasons why you have that kind of hierarchy or sort of division in the market. And initially, I think everyone thought it was kind of a generational thing. Only young people care about sustainability. I don't think that's the case at all. Actually, we don't really see that in the patterns of the customers that buy from businesses in which we invest. So I always thought it was more about an informational difference, people who have access to more information. So if any of us have grandparents who are interested, they're just as likely to be, and they consume information and they know kind of what the impact of their purchases are. They're just as likely to become eco-conscious in their consumption patterns as a Gen Z. Unfortunately, there's also an income and affordability thing, right? At the moment, so many sustainable products are premium because it's within that premium. That the margin model works for doing things more sustainably. It's cheaper to be unsustainable still. I hope that won't be the case in the future, but it's in many places, virgin plastic is still cheaper than recycled, etc. And virgin cotton is still cheaper than recycled cotton or fair trade cotton. So that problem is one that we do struggle with. And to be honest, I kind of admit point of vulnerability that at the moment, if you look at the pipeline of investment opportunities we have, you look at what we've invested in, like these are premium products. They're not only premium because they're sustainable. That's not something we believe in. You can't just charge a premium because you're sustainable and for no other reason. They're premium products because they perform better. They just are better in every way. And then within that, one of the things they can afford to do is use more sustainable inputs and ingredients and supply chain. So they are still driving and championing sustainability, but they are premium products. I think that's a question of scale, though. Really, it's so easy to see as you're scaling up, your cost of goods gets lower per unit, as you purchase more volumes, and that's just a pattern that you see in every segment of consumer products. So you would hope that over time, these businesses are able to compete more on price, and that's just a point of maturity. They eventually do. There's things like packaging where it's not going to be it's going to be owned by one brand or another brand. Everyone in the market will have access to the same sustainable packaging, and at scale that can be produced in a much more low cost way, and so that should become more affordable as well. So I think at the moment in a cost of living crisis, when affordability is everything, sustainability it is always tempting to sort of put it down to that and say, of course, intuitively it should get demoted on the list of priorities. But it's not necessarily happening, by the way. There was an article saying in the Guardian about fair trade. The premiums people pay for fair trade in the UK, they were up year on year in 2022 in the middle of like huge energy crisis and price rises, cost of living crisis. So, but yeah, the pressure, I think, and the trade-off between premium and sustainable is still going to be a bit of a barrier that needs to be addressed, hopefully through scaling up.
But your point is that ultimately capitalism works because people buy better products, better, cheaper products, and it's incumbent on us all in this side of the fence to just do that better and accept that as a challenge of that's the joy of it, isn't it? Whatever segment it is, whether it's an oven cleaner or a car or whatever. Ultimately it's got to be, at least if it's par, then of course you just buy, of course most people, that 70% just default to the better sustainable product. So I think that's part of the joy of the challenge, isn't it, in a way?
But also it's really nice. I had a great story, I don't think we mentioned it last time, and it happens to be from Unilever, Vish, but it's about a dishwash product in South America, which when they replaced fossil fuel carbon with renewable carbon in the formulation of the chemicals, they found that it had a hand softening benefit as well. So actually it was a better product for taking the fossil fuel out, and I think it retails at the same price. But I think we're yet to discover some of those fortunate happy accidents where actually find it nicer, which would be great, when we can get into that.
One of my favorite stories was that in Walmart in the US launched a sustainability initiative, and I think I'm trying to remember the number now. I wish I could remember the number. The amount, like the hundreds of millions in energy costs that they saved through replacing light bulbs with LEDs in all of their stores was one of the biggest cost savings that the group has ever achieved, and it was not identified by a team who are there to make operational efficiencies and save costs, but the motivation that comes with doing it for, let's say, more than just the money allowed the sustainability team to identify it, and it's a great example of lean and green supply chain, being lean being money saving and green being planet saving. It's great.
I'm conscious we're coming up to the hour, so we'll finish in a bit, but maybe we'll see if anyone wants any questions, but I thought I might ask you one final thing, and Mark, you're welcome to do the same, but which would be if you could offer some encouragement to anyone listening on the live stream, which is, by the way, it did end up on LinkedIn as well as
Excellent.
here.
So
If you could offer some encouragement to those people listening or watching today who are sort of writing their own frontier story in a way, what might that be?
I think I mean, to me, a frontier story involves a lot of risk, and you really just have to be prepared for that risk, that adversity, and just know what's motivating you, know your runway as well personally, how much time, effort, risk you've got appetite for, and go in with your eyes open. But if it's a frontier story where you're really driving positive change, if you're doing it for more than just the money, do not underestimate how valuable that is in terms of motivation. And you need people around you. I've had amazing support from my co-founder here and the team around us at FBP, even service providers around us who have been fantastic and giving us freebies to get us up and running. When you're doing it for more than just the money, people want you to succeed. They will provide support, and you need your tribe. Definitely, it is. Yeah, it's incredibly motivating, but it's also a massive commercial advantage just to have people who support you, stakeholders who support you at every step of the way. So gather that support, keep it close to you, love it, give something back to it, and make sure that you keep those close. And yeah, that would be a key enabler.
I love it. That's really good. Mark, anything from you, or should we go and see if anyone else wants to?
No, please, let's go to questions. No, there's one coming in.
I can't see. I'll just get it. Has anyone got a question? Yeah, someone has, have they? Sarah, I don't know if you want to ask. Sarah, do you want to ask your question? If you're still here,
she's on mute, but
maybe Sarah's not here. I'll read it out. But Sarah, you can always jump in and kind of comment. What's stopping brands applying behavioral science and marketing effectiveness principles to sustainability? We know how to do things better and optimize cash. Does that correlate to carbon? I wonder why I can't unmute you. Anyway, does that make sense, that question?
Yes, completely understand it. Thanks, Sarah, for the questions. I think maybe my old-fashioned way of oversimplifying the question, but the way that I interpret it is you're asking about payback. We talk about payback in any investment decisions, and also companies talk about payback when they're making marketing decisions or R&D decisions. Why can't we apply that to sustainability? And look, I think you can if the way you're measuring payback is through old-fashioned income and cost. And some sustainability initiatives do generate income, and some of them save cost. The thing that's challenging at the moment is really measuring payback in terms of, let's say, positive impact on planet and people. Externalities is what we're talking about. Stakeholders outside of your own four walls, and stakeholders where, frankly, as an employee of a company, you're not accountable to them, and as a shareholder of a company, you might not care about them. And all that's back to kind of fundamental principles of capitalism. Is it for shareholders? Is it for stakeholders? By the way, we are run for stakeholders. That's the case with all B Corps. But that is that is accountability for externalities, the impact of what you do on others, and how to factor that in. Even if you factor in, how do you measure it? How do you weigh up the costs and the benefits? There are ways of people are innovating ways to do that, but they are all super theoretical and far beyond my understanding, to be honest, of how to kind of make a quantified ethical P&L where you can put it up alongside a dollar of income or a dollar of cost, and somehow see the equivalent units of cost benefit. But what I can say is, putting that aside, there are plenty of ways of arguing, but also proving, that the actions that you take, if they're good for your stakeholders, will pay back in terms of your business in very measurable ways. For example, if you're treating your employees better, you should have less employee churn. There's plenty of data out there that shows that having less employee churn is better for productivity and better for the long-term profit of the business. So I think it is just about getting the word out and spreading the word that anyone who is in their business and making an argument that you should do something, we should do something because of sustainability, it's not just a moral argument, it's also a business argument. And there are lots of there's lots of evidence out there you can gather in the public domain that can help you support your business argument for doing something more sustainably.
That's really good. Sarah, I can write to you separately about return on carbon invested if you're interested in that. Andrew, I think you had Andrew Keep. Are you there? You've got a question, haven't you? Hi, Andrew. Tell us briefly who you are in like 10 seconds who you are, and then ask a question, Andrew.
Yeah, and thank you for the chat, guys. It's really informative. It's been really good listening to the different questions and dialogue. So I'm founder of Keep Creative Group. Obviously, my name's Andrew Keep, so I'm playing on the name. But I've spent 20 years in broadcasting. So I'm doing a similar thing to you, Vishesh, is coming to this with an approach of something needs to change. We've worked in an industry which has been kind of in one-dimensional for a lot of it. And how can we change this navigation? And a lot of that is using brand expertise and communication. That's where I come from. So really what I managed to do is partner up with a lot of scientists and business leaders to say, okay, all the conversation points you've talked about and touched on throughout the last hour is really relevant. I'm finding a lot of business leaders really don't know where to take this. It's almost like they've kind of hit a bit of a roadblock and they're used to traditional methods and they're not really sure how to navigate going forward. And that's where we're trying to help. I guess the question for me is, I spend a lot of time as a result of that, really sort of explaining more about ESG values rather than explaining the products and services we can help to kind of navigate their journey or help them. What I'm finding is a lot of information and knowledge is lacking in that kind of C-suite level. Do you guys find that? Are you generally finding that as well? Is that a trend you've kind of come across most? Or I'm seeing a shift, but it's taken a bit of time still to say, for example, if I said what scope 1, 2, and 3, most people look at me really blankly and say, I've got no idea.
Interesting. And therein lies the opportunity for you and your business to educate,
exactly.
which is great. Yeah, which is great. No, I mean, my sample size is quite narrow, right? We're backing entrepreneurs who not only should be already driving sustainable change. Otherwise, why are we backing them? Because that's our job. We're enabling the next generation of Patagonians, theoratically, right? That's what we're supposed to be doing. So we should. I think we're preaching to the converted. If we are meeting. But even there's an even stronger filter. We link our incentives to the achievement of ESG progress in their company. If they're not up for that journey, they definitely shouldn't take the investment from us because it will go sour. Yeah. So there's already a filter on top of it. Even if they're saying, "Yeah, we're very sustainable," but no, we don't want to become more sustainable because we're already sustainable enough. They're not for us, right? So by virtue of that double filter, actually, we're really working with the C-suite who are absolutely on it in terms of that stuff, and they will often be experts actually in their product segment, where we can provide expertise is kind of the broader picture and throughout, and helping them scale up and professionalize. Professionalizing ESG in a business is just like professionalizing anything. At the beginning, you don't need to do it because it's all in the head of the founder. And then actually, if you're 30 people, or if you're 300 people, then that needs to be more and more professionalized and baked into the procedures and the processes of companies. And that's where we sometimes see they need hand holding. How do I take this kind of mission in my head? How to take this knowledge and actually implement it over a greater scale and then standardize it so it doesn't depend on me anymore.
Yeah.
The business can survive without me and scale. That is where we find they need more hand holding. But these are the Davids rather than the Goliaths that we're backing. So I'm glad that in the Goliath world there should be plenty of market for you to sell your services. That's great.
Yeah, and I think it's great that you've got sustainability managers and sustainability C-suite level senior execs who are kind of joining the ranks, especially the bigger companies. That's great. Our interest is also working with SMEs or at least startups in the phases where they've got amazing tech or they've got amazing products, biological products, which are going to do amazing future proofing. And I think they're the ones that are really fascinating too. So it's kind of juggling between those two aspects that we're finding quite a lot of navigation. Like you said, that early path of generating leads and also kind of figuring out where to go with it. Yeah. Fantastic. Yeah. Thanks for your insight.
Good.
Very good. Thanks, Andrew. Mark Longstaff, you have a question. Hopefully you can hop on. Hi, Mark.
I can hop on, Leo. Yeah. Hi, everyone. I'm Mark Longstaff. Been a bit of an entrepreneur at times, and I do a bit of corporate stuff every now and then if I think it can make a difference as well. I was on Leo's cohort for Cambridge University Business Sustainability course, finished about 2 years ago, I think, Leo. So we should know what we're talking about now, shouldn't we? The title of the event was, where do we find the money to find the green companies we really need? And some advice for people on the call or people that will be listening later is quite often the people with the money ask you to go through some stage gates to get the money. And quite often those stage gates can make you feel like a bit of an idiot. Have you sold anything yet? No. Can I have some money to scale the scale manufacturing so I can go and sell something? So you haven't scaled the manufacturing. And it's how do we get some kind of thing where we come together and say, how do we help companies actually do what is the title of this event today?
Yeah, you're not going to like the answer, unfortunately. I've got tremendous sympathy for that. You know, we are, you know, we don't invest in startups, but we are a startup. So I've got sympathy with it, with all those startups. We're in a community of startups here. We're in sustainable workspaces at Waterloo, if anyone knows it, and all the startups here next to us are focused on climate change. We have a lot of sympathy with that. I think, you know, the foundation on which our business is built is that you won't have to sacrifice profit motive in order to focus on and make some change in terms of sustainability. But what that also means is you're not moving away from the old model of risk and reward. Unfortunately, these stage gates, thresholds of progress, they're built on an idea of risk and reward. You know, how much risk is an investor willing to take? I think the expecting somebody to put aside those stage gates in order to really create positive change, it can happen, right? I mentioned earlier, perhaps at the very beginning when we started, there are impact funds that have been raised in what's called concessionary capital, where the investors behind those might be philanthropic, you know, high net worths who are happy to sacrifice returns to some extent in order to get things done. It's not the same as charity, because then you're losing all your money in order to make change, because you know that money's going to create change, but you're never going to get it back. This is somewhere along the scale where you say, I don't want my money to be lost. I want it to be preserved, and I want it to keep on making a positive impact, but I don't expect it back, and I don't expect a return on it. That exists out there, but it's not scalable really, because you're just depending upon the benevolence of some very few high net worth individuals who are philanthropic. And then the thing that might be more scalable is the role of government again. So, you know, I think Innovate UK is doing a great job, for example, grant giving. You know, I hope the next government scales that up. I hope it does more in terms of not just tech innovation, but in terms of sustainability innovation as well. You know, making sure there's more available to support businesses through that would be a fantastic positive impact in itself, and a way of scaling impact in itself. But yeah, I don't have a great answer for you as to how to encourage purely profit focused investors to relax their criteria, unfortunately. And yeah, I wish I did.
Powerful. I think maybe we should come to a close, Shrivy. Vish, before we finish, I was going to ask you whether there was anything for anyone here or listening that they could do to support the Future Business Partnership or you. Anything you'd like to...
That's very kind. That's very kind. Yeah, please spread the word. You know, we're trying to do something more positive to change our industry, and we're trying to be a positive influence. That's part of our job as well. So we're broadcasting everything we do. I say we've innovated this whole thing about linking our incentives to ESG, but we're very open about it. You know, the whole thing is an open playbook. We would love to be copied. Actually, that would be quite a moment of personal satisfaction that others were following. I don't think we're at the stage yet where we deserve to be followed. Let's say we need to be more successful, and then we'll have a positive influence. But yeah, I think what we'd love is just to spread the word that there is a better way of doing things. Not all private equity firms are bad, and yeah, we can build our brand that way, and that will help us tremendously.